It's been way too long. It's been way too long, and I have a reason for it. So welcome to episode 3 of the Futures Challenge, going from not knowing anything about futures to becoming funded with a Futures Challenge account with a Futures prop firm. Because I know that that's what a lot of you guys want to do. And let me tell you, the reason I'm using the glasses inside and it's like 11 p.m. at night, meaning I don't need these glasses at all, is that I failed. I failed the Futures Challenge, but let me tell you, there is a reason. There is a reason, I swear. So now, this is where I put the hat of the excuses on why I failed the My Funded Futures Challenge. Why I failed the Futures Challenge. But in all seriousness, welcome to episode 3 of going from zero to being funded with a futures trading account. And a lot of things happened when you saw episode 1, when I was emotional, when I missed a beautiful long. Oh my god, this was such a clean long. And when the market just moved in the exact opposite direction of what I wanted to do. And then in episode 2 of me just winning a little bit, losing a little bit, winning, losing, the trade running to R, and then eventually moving all the way back to break even and letting me finish the day on a loss. So in episode 2, we finished the episode in drawdown and minus 0.5 R drawdown. At that point, I came to my senses because I was looking at what I was doing in the market. I was looking at how I was approaching these challenges, and I understood that I wasn't being myself. And so I decided that I wanted to start risking more on the challenges. And that is where all this story comes together. Because a little bit after the video came out right here on Monday or Saturday, I don't remember when I was posting back then, I actually entered in no more trades ever since you saw the video, mostly because there was FOMC coming. If we go into the week of the 17th, you can see that there was no high impact news on Monday or Tuesday until Wednesday, where we had federal funds rate, FOMC statement, press conference, everything. And so my idea was, okay, the market is going to be range bound in these 2 days. And because of exactly that, I did not trade Monday and Tuesday. And that is where Wednesday comes in. FOMC, I'm ready. I'm in the Discord. I'm doing a live stream, trading live for everyone to see. And I see that the market taps a beautiful 15-minute fair value gap. It starts forming bullish order flow and I enter. And that is where I enter in my biggest winning trade of the challenge. Day finishes in good profit. I'm 1 hour in profit total on the challenge. And then the next day I take a small loss. Completely fine. It is what it is. That's what we have risk management for. But then on Monday, we come in hot and we enter in another great trade. But then on Tuesday, I lose again. So I was constantly running this break even of I'm up 2R, then I go back to 1R. And that's where I thought, I've been doing this for more than a month right now. It doesn't make any sense for me to be risking 0.5% on a challenge that is this cheap. Now, the reason I say that this challenge is so cheap is because of where I am at currently in my trading, where $250 isn't a lot for me to invest into a challenge knowing the potential outcome. And so I knew that the fact that I was doing the challenge was hindering the possibility of me getting funded all along because I didn't want to fail. And so I decided at the end of March that I was going to start risking more. And that's what I did. And then eventually this challenge was indeed failed. So I was in good profit, and then eventually the trailing drawdown caught up to me because the trailing drawdown went up to 148.1 thousand, and eventually I went from a balance of 151,000 all the way down to 148,000, and I lost the challenge. And to me, I thought, well, it is what it is. I'll just buy the challenge again and I'll pass. And that is where my funded futures came in clutch. I have to say that they came in clutch because they made this challenge basically a no-brainer for me to pass. And that is because they introduced $50 per account. 50K account, 100K account, or 150K account, all $50. That was all for the month of April. And I thought, well, now to me, this is all a numbers game. I'm going to literally, and this was my thought process, because once again, remember, $250 wasn't a lot. And so imagine when the risk is $50. So I understood, okay, the way that I'm going to approach these challenges is by buying the challenge and trying to pass in one single trade. Because the difference between my funded futures and Top Step, for example, is that they don't have a consistency rule, which means that I'm able to pass or fail in just one trade. And I just needed to have a 1 to 2R to be able to make money. that was basically it. That was all that I needed. And so I came into this with more of a FU approach, and you'll see that obviously. And a little bit after, in April, I enter in a couple of trades and boom, they are a loss. And I'm like, hey, it's 50 bucks. It is what it is. And that is where I went into the next one, in which I profited in the first day. It was on the Friday. I profited 2.3K, which means that now I only have to profit 6.7 grand in order to be able to pass the account. But don't forget, the trailing threshold means that the drawdown is still capped at 4.5K. Risking the full amount is basically the same on a new day. And so on the next day, I was so close to passing the challenge. I was really close on Monday to pass the challenge. And then the trade just completely reversed on me. Not only that trade reversed on me, but then I also eventually blew the account on the same day, because again, don't forget that this is all based on the probabilities of $50 in, how much money can I get out of these accounts? That's really my focus right now. And that is why you can see that I had a good trade, but then eventually I lost it. And at this point was when I started thinking, why am I even doing this? I don't need to get funded with the futures account. The rules are more strict. I'm not from America, so I don't need to be trading futures because I have CFDs open to me. Like, everyone is willing to give me a CFD prop firm, meaning I can purchase from any prop firm basically. And so why am I doing this? And I reached a point where I started thinking, should I just say on YouTube that I failed and get it over with? At this point, I was like, man, I'm so tired of trading futures just for the sake of it. Like, it doesn't make that much sense to me. But this is where I understood that, hey, I'm a profitable trader. I know how to trade futures. I have a profitable edge. So now the game that I'm playing is not, oh, how much percentage did I lose? At my stage, it's like, how much money am I putting in and how much money am I taking out? And at this point, don't forget that I lost 2 challenges that cost me 50 bucks. And I lost 1 challenge that cost me 250 bucks, which means that, again, the probabilities are still in my favor. I just need to withdraw like $1,000, let's even say $10,000, and I'm already making a lot of money, like 20x return on my money. And if you tell me that that's not worth it, I don't know what to tell you. Go ahead, trade your personal broker, but I don't know what to tell you. And that is where we came to the next one. The next one was where everything changed, because at this point I was like, okay, listen, I either want to pass in one trade or fail in one trade. I don't care. And that is where we come into this account. In this account, as you can see, it was $9,000 first day, boom. As I said that I was going to do, it's either pass or fail in one day. And as you can see, this trade actually started with a loss. And at this point, I took this loss and I was like, oh my God, I'm so tired. I'm so done with this. I can't believe that this is happening. But then I saw the market for what it is and I shorted the market. With 3 contracts, it was 3 contracts short that eventually the market just plummeted and went in my favor. So let's jump onto the charts and let's see the trades. These were the trades that I took on the 15th of April. Basically, what you can see right here is that on the 15th of April, as soon as the market opened, the market moved straight lower. And for me, when the market moves straight lower, so let's quickly put here, this is market open, so I'll put it as futures open. As soon as the market opens, the market just absolutely moves lower. And the first thing that it does is that it sweeps the low. So it sweeps this low. In my mind says, okay, after we have an extreme move lower, in a reaction after a sweep, to me, that is bullish. Once I saw that, instead of entering in this first trade in this pullback to move higher, I actually waited for something called the confirmation entry, which again, the people that are inside of the community know in detail what it is. But for you guys, basically it is that after we sweep below, you don't enter in the first trade, you wait for the next order block to form, and that is where you enter. And as you can see, we had this reaction and we moved bullish, we closed above, and then we have this fair value gap right here. So this is where I execute, and then the market moves straight lower. At this point, I'm thinking, okay, I'm tired of this. I'm going to lose another challenge. And so I actually closed the trade for minus $1,000. And that's when I was finally able to look at the market unbiasedly, because I was doing the same mistake as I was doing before. So what happens a little bit after is that the market sweeps this high and it starts breaking lower. This break lower forms this fair value gap right here, and it creates this order block. So not only that, after sweeping this low, we tap this big order block formed right here, and the market then gives us the market shift. So at this point, I'm thinking, okay, now we have a fair value gap, we have an order block, a very heavy market, and so I want to short, and that is where I basically shorted. My stop loss was above the high. The stop loss was basically, if I lose, then I get taken out. So I enter in the trade, and my idea was, hey, if it actually moves bullish, then whatever, I lose another challenge. But if it moves lower, then I just want to have full TP. It is what it is. We've talked about this. At this point, my idea was not, oh, let me risk 1% to try to pass this challenge. No, absolutely not. My idea is, okay, I want to get funded. I am a profitable trader, so money in, money out. If I'm paying $50 for this account, I just need, let's say, a $1,000 payout for all of this to be worth it. All of this series to be worth it. So I can easily get a $1,000 payout, and because of that, I was risking like this. And wait until the conclusion so I explain why you should and you shouldn't do this. So I enter in the fair value gap, and then the market just starts tanking. And then you can see that my TP, it wasn't really at the low, but it was almost at the low. It was a little bit below daily open. And notice how we built up all of this liquidity as the market was moving up before market open. So to me, this was like a no-brainer trade that it was going to hit TP. And so if the market moved bullish, then whatever, I would have taken a break even here. Then the market just range. Again, I'm not thinking, oh, the market might reverse from here. I genuinely just don't care. I just want to pass the challenge. And that is where you see the market range. How long was this range? This range was like 2 hours, if I'm not mistaken. Yeah, so this range was 2 hours, and then the market ended up completely moving towards my target. It did then move a lot lower, but that is basically it. That is how I passed the challenge. I took a small loss here, and then I took a $10,000 win right there, which again allowed me to pass the challenge in basically one trade. Well, it wasn't one profitable trade to pass the challenge. And the reality is, during this challenge of futures, I understood that my goal, especially with futures and especially with this big of a discount, the game that I'm playing is not the game of, oh, I have to risk 1% per trade and then try to pass. No, it's like, if I'm paying $50, only thing I'm thinking is I want to get funded. That's it. And the only reason I didn't go for more funding is because I still have the other funded accounts from CFD firms and I don't have to do futures. I can show you my funded account right now, where even though I spent $50 3 times, right now my funded account is also still in $3,100 profit, and with a really good overall trading period. And this one was a break-even day. To me, this is the game that I'm playing because I know that I'm profitable. I know that once I get the funded account, I will make money. And the problem is, and the reason I don't explain this on YouTube in that much detail, is that a lot of people that are not profitable, that will not make money on funded accounts, are going to look at this and they're going to be like, oh yeah, let me do this too. And then all of a sudden you're losing all of your money. And that is the last thing that I would want you guys to do. And so for me, the most important thing that I want to tell you guys, and that's why I documented this whole thing, is that there comes a point in your trading journey where it's not about being sustainable when you're not making money, but being sustainable when you can make money, which means you can't make any money from challenges, but you can in funded accounts. And that is why you would be more sustainable in funded accounts and not in challenge accounts. But again, this is only once you have a profitable edge. This is only when you have a simple trading edge. This is only when you have money in the bank that you don't care if you lose it. And again, the most important thing, once again, I have to say this again, if you have a profitable edge, because a lot of people that are going to listen to this advice do not have a profitable edge. If you've never been funded before, don't try to do this. If you don't know what type of risk management and money management you're doing, you should not be doing this. So just keep that in mind. And that is why I don't share this on YouTube like publicly, like, hey, do this. Let me know if you guys want to see part 4 of this video, where I would break down the total cost and how much payouts I got from this funded account. Let me know if that is something that you want to see, and I'll make a part 4. These are not being that popular, like people don't really care. And I think it's because people mostly care about CFD firms and not futures firms. So let me know if you want to see part 4. If it's an overwhelming amount of people, then I'll probably do it. And by the way, just one thing onto the last point. most people that have the most amount of payouts with prop firms, they have all kind of gamed the system in terms of risking more during challenges, being more sustainable during funded accounts. But that is basically it. If you guys enjoyed, then make sure to please leave a like and subscribe, because this lets me know that you guys want to see more of these type of series. I hope you guys enjoyed, and I'll see you next week. Peace.